Thanks a lot, and welcome everyone. Welcome to this webinar, a new type of webinar. We haven't done this type of webinar before, but lately a lot of people that started a new position in innovation have joined my network. And Julian and I were talking about this, and we thought, hey, let's just set up a webinar. What I would do if I would start a new position in innovation with all the learnings that I have, I've gathered in the past 10 years. So who am I? I'm Maarten van Kroonenburg. I'm going to host this webinar. I'm the founder of BW Ventures, which I founded in 2016. And with BW Ventures, we help corporates to create commercially successful ventures. And over the past 7 to 8 years, we've helped more than 200 innovation projects. But I started my career as an entrepreneur as well. So I started my career as an entrepreneur at the age of 19 in the music industry, and I learned a lot about how to come up with new propositions based on fan behavior instead of just writing out a lot of plans, hoping for the best, and seeing Spotify run next to you super quickly. So I needed to learn a lot about how to analyze behavior of very specific niches and come up with new value propositions in that ecosystem of the music industry. And all these types of learnings I've molded that into a model that works very well for us to help new innovation projects to set themselves up for success quickly or kill their projects quickly. And a lot of these learnings will be shared with you along this webinar. So a few companies that we've helped in the past 7 to 8 years, ranging from Sony and their headquarters in Japan to a more local company in the Netherlands, Dela, which is in the funeral services, Cisco, but also National Police, for example. So we've got a very broad range of companies that we help. But the main methodologies and the main processes that we use are kind of industry agnostic, so the learnings will be applicable for everyone within the webinar. So what are the topics that I'm going to cover in this webinar? We're first gonna just go into, hey, you started this new position in innovation management. We're gonna talk about the 4 main tools that I distinguish in innovation. We're going to talk about the difference between research and development and innovation. We're going to talk about the commercial success. You already heard me talking about that in my intro, so we're gonna also dive into that topic. A little bit on stakeholder management, and when to kill a project to end my talk. I think we're going to talk about, you're going to listen to me about 30 to 35 minutes, and then there's room for questions. So let's dive in. First of all, congratulations. Most of the people that joined have started a new position in innovation in the past 3 to 5 months. So probably you're still figuring out how the company works, how your new position is going to work out. Probably you're learning more about the innovation portfolio that the company has or the project that you're working on. But let's, leave all that behind and first, celebrate that you are working in innovation, because you are in a role that is basically continuously swimming against the current, because you're the one that's going to change the company in the long run, but in the short run you're going to face a lot of challenges. And I think it is one of the most challenging roles within a corporate. Why is that? You're going to figure out everything, and you need to figure out how to change something that has been done for probably 10 years in the same way. And it's your job to convince all the others to do it in a different way. And in the same time, deliver value, change probably a business model or a technology that you work with, and make it feasible. So, well, good luck. It's a great job, but you're gonna face a lot of challenges. On the other hand, I think when you do overcome all these challenges, it's, I think that's one of the best things that you can have within your job. So before I continue, I always like to start with this one question. And as Julian just mentioned, in the Q&A part of this whole thing, I will ask that question, or Julian will put it in there, and you can answer what innovation is in your perspective. There we go. Exploring new tech or business models and exploiting existing ones. Nice. Looking for some more answers. Aiming for the big, but also working on incremental change. Nice. Leading the company into the future with better/new business models. Well, sounds good. Let me share you my perspective on it. I think innovation is the orchestrated collision of different disciplines, ideas, and technologies, and this for me is the most important part, to generate value. And generating value can be for the internal company, so optimizing processes to deliver the value to your clients quicker or better. But that also means probably creating new value propositions or new products or new services within your company. So to get there, you need a lot of different disciplines. You need way more ideas, and then figure out the right technologies to actually provide the value that you think you can find. Now, to dive in a little bit deeper, over the years, we've figured out quite a lot of mechanisms for innovation. And what we see in practice is that a lot of companies are driving a lot of different activities, like scouting for startups, running hackathons, running startup prizes or challenging prizes, sharing resources just as an open innovation with multiple parties to see how they can solve a very specific issue. The more advanced corporates maybe already have a corporate accelerator or a corporate incubator in which they accelerate their own ventures and their own incubated projects. And some even, that's a sort of newer thing. They already have venture clients, so people that actually build a venture for them and then buy it back. And the interesting thing is that whole question of what is innovation is a super broad question, and typically it's answered different in every single company. Why is that? It's just too vague. Innovation is such a broad topic, which I think one of the first things that you should do in your new job is to understand what is innovation literally for your organization and maybe even for your team. Because sometimes people think that innovation is just optimizing the processes that are already out there. And the board is just funding the processes, funding projects that optimize the processes. They are not funding new business models or, creating new products. Sometimes they actually are funding with a corporate venture capital fund, and they also run a corporate incubator. So learn what is innovation within your company, and then see what kind of activities the company is employing to actually drive innovation. Are you just focused on hackathons, or are you just focused on venture building? What kind of activities are they employing, and how is it orchestrated? Now, what I think is important to understand, and this will help you a long way, is the 4 tools of innovation. And it was one of the titles, right, within the invitation that we sent. But what do you think are the 4 tools of innovation? And you can use the Q&A or chat again to come up with some suggestions or answers. Adaptability is one. See, bring a new first-time product on the market. Also see ideation, incubation, maturation, exploitations, maybe. Sounds like stages of innovation. Yeah, that's true. That's true. Okay, let's see one more. Okay, I'm gonna dive in because I already figured out it's not the easiest question. So, what most of us focus on as a tool is building new ventures. Most people that we ask, what is innovation or what are the tools of innovation to drive innovation is building your own ventures, building new products, building or creating new value propositions from scratch to add to your product portfolio. But that, in my opinion, is just one. The second one is investing and or collaborating with startups and scale-ups. And mostly this is done to deepen your know-how about a specific technology or about a specific market. I think the companies that we work with, about 30 to 40% also do investments in startups and scale-ups. And I think it literally is a tool that can really help you to strengthen the capabilities of your corporate, especially if you want to go into new markets or use new technologies to provide value. Now, the third one is actually a stretch, in my opinion, of investing, and that is actually buying companies, M&A, merging and acquisitions. And what is funny, when I started out in innovation, I always thought that the M&A team was a sort of, it was the enemy of the innovation team, because the only answer that they always gave was, yeah, you can build this on your own, but why not just buy another company that already does this? And when I started out, I was like, yeah, but we forget about all the learnings. We can't escape, or change the company when we bought it. And what we want to build or what we want to create is a new value proposition and is a new product. So why just buy a full company? After 8 to 10 years, I think, or my perspective has it has changed quite a lot, because what I think is within your toolbox, M&A is a great tool to help you accelerate or even defend your presence in a specific market. And what my advice would be, if you're starting in a new role in innovation, is get close with M&A. Just learn what kind of targets they are looking for. Because maybe you are working on a project and you have made learnings about a specific market or about a specific technology that can be super, super helpful for the M&A team. And thus, once you've helped them, they can also start helping you looking for other companies that can actually help you accelerate your projects. So don't see them as an enemy, but get close to them and start working together with them, because I see very, very great results in M&A and innovation teams working closely together. What's funny, in the past years, especially last year, I see a new term popping up, which is corporate development, which is literally innovation and M&A in the same department. So that is something to look out for as well. Now, the last tool that I think is interesting is collaborating. And with collaborating, I mean literally creating joint ventures. So putting in not just know-how, but both have the same incentive to be successful, and actually creating contracts for that. Like, if you're taking risks, both of you are taking the same risk. You both have the same incentive to be successful. But that can still be a very, very good driver of innovation, and is a tool that I think you should put in, or you should learn about and put in your innovation toolbox. Now, if you have at least general knowledge of the 4 tools, you will have way more, power and creativity once you stumble upon something that really works to help accelerate that project. Or when you're stuck with ideation and you can't break, that barrier that you're facing, one of these tools can probably help you to break through that barrier and get you further ahead. So I hope this is something that will help you along the way. If you have any questions, write them down and ask them in the Q&A session with regards to the 4 tooling. Now, I also asked this question in the topics that we were going to cover, like what is the difference between R&D management versus innovation management? And I'm quite curious to know what do you see as the biggest difference between research and development and innovation? R&D within the business/product, innovation more new/extra focus, innovation is outsourced, R&D. Raymond, are you keen to maybe unmute and elaborate a little bit more on your answer?
Oh, it is very practical. While research and development is usually used, in my opinion, and I've worked in some production companies, so that's where the answer comes from, from polishing on products and staying within a certain scope of products to improve and to find new solutions within a very limited scope.
Yep.
And innovation can be very wide, as for instance, you look at other segments, other technologies, and there you recognize some opportunity to copy that technology or to use that idea within your own business, and thus building on new kinds of solutions outside of the usual trajectories that you have, and perhaps even come up with totally new products and new concepts that would add business. So that's my perspective.
Yeah, great. I'm going to elaborate on this more using a few levers. So thanks for the elaboration. Shivali, maybe you want to you also want to unmute your mic and elaborate on your answer?
Yeah, sure. So I think as already said, R&D is more specific, very pointed technical research, and it's more incremental to develop a better product or a new product. But it's more testing. I imagine R&D as labs and simulation and tests, whereas innovation is also more open, and we look outside to say what are the already built, not just products, but also, customer segments or customer, models to attract customers, business models, etc. So it's much more broader, less hypothesis based, and more, it's more exploratory.
Thanks. Great addition. So what I always like to do is when answering this question, I always like to have a look at the 6 levers of innovation. And the 6 levers of innovation is a model that actually explains the 2, in my opinion, most important parts of innovation. You've got business model innovation, and I've heard, the people that put in the comments also talk about business model innovation and about technology innovation. And what I think is important, if you look at the business model part, you've got 3 levels in there. You've got value proposition innovation. So how do you promise a value to a market? And you can innovate in that like big time using different earnings models, giving away stuff for free and then converting them later on, or like Google did, keeping everything for free and then, earning stuff in another way. But the way you promise value to a market is part of the business model innovation stuff. Then you can also innovate within your supply chain. So if you're gonna, part of your business model is having a supply chain and knowing how to form your resources into an end product or service. And these resources all go through a supply chain, but you can also innovate the supply chain and just cut out pieces of that supply chain, right? You can also change your target customer completely. So instead of going B2B or business to consumer, you can also go B2B2C, or just, go into a completely different market with the same promise. That is all part of the business model innovation, and literally every single part can be innovated. Now, if you look at the technology part, you've got 3 layers as well. And what we distinct in there is that the product and services are the actual products that you will, you can touch, or you are the one that will experience the value of that product or service. It's basically the end of that chain. Now, to get you these products into your hands, or use these services, you also need process technologies. These are typically technologies that help you process a resource from raw material, for example, into a next phase of the product. And to innovate there, you need to do R&D. You need to come up with new technologies or optimize technologies to get a more efficient process. Now, the last part is enabling technologies. And this is, like, in my opinion, the lab stuff. These are projects that run for 10, maybe even 20 or 30 years. Quantum computing is something that is being worked on right now as an enabling technology. But let's not forget about AI. I mean, AI as an enabling technology, I think we're working on that for like 30 or 40 years. But right now, we're experiencing the actual products and services that you can experience as, for example, OpenAI, etc., etc. Now, what I think is very important is that R&D is, in my opinion, is a crucial component of successful innovation in the long run. But what R&D does is mainly focus on the process technologies and the enabling technologies. For you, as an innovation manager, these are the blocks that you also you should focus on that as well. What is the promise that you're going to make towards which target customer? What is the market that you're going to enter? How are you going to enter that market? What are you solving for these people? And what is the best fitting application of the found technologies within R&D? And why do I stress that? I see a lot of people that work in R&D and that also apply innovation right in their title. And I think it's true, because you are innovating technologies. But if you want to create commercially successful innovations as a company, you need to both focus on business model innovation and technology innovation. So if your role is more focused on the technology, then if I would start in a new position, I would learn a little bit about, okay, but how can I create successful business models or successful go-to-market strategies, just to, learn a little bit more about what that team is doing, because in the end, your technology and the applications that customers will use will be highly influenced by what the market actually wants. The other way around, if your focus is mainly on creating new value propositions or optimizing supply chains or innovating supply chains, then it's also a very good thing to start talking to R&D and the more technical driven innovation teams, because the two will go hand in hand and you will get way, way, way more success out of that. Now, this feels like an open door, but to be very honest, I think only 10 to 15% of the companies that we work with really have these two processes intertwined with each other. Because probably you've got product managers and product owners, and you've got innovation managers, but these two really need to work together. So you've heard me say a lot about commercial success. And commercial success, I think, is one of the most critical things for a successful innovation team. And the average lifespan of an innovation lab or an innovation team is between 3 to a maximum of 4 years. So 90% of the innovation teams or the innovation labs are being killed after 3 to, let's say, 4 years, which is very, very short. In my opinion, most of the teams, they start and they completely fall in love with their ID list, with all the technologies that they have and that they can use, with all the teams that they can use, and they start creating new ideas and new products and services. And after like 2 or 3 years, they discover that the business model that they are working on, it's not working. Nobody is paying, or a very small amount of people are actually paying for these new products and services. While if you look from a board perspective, they invest heavily in the team, right? They create teams of 5 to even 10 innovation managers and people that are working in that lab or in that team. Maybe you have smaller teams with 2 or 3, but that still is a heavy investment. And in a few years, they actually want to see first, commercial success. And commercial success doesn't mean your innovation needs to be profitable, but at least they need to start seeing cash flows, right? Cash coming in from the new investments, or huge amounts of cash saved because of great innovations within the company. So not to enter new markets, but new ways of working or new ways of applying technology that actually saves a lot of money. So in my opinion, I think especially in the past 10 years, this has been overlooked quite often because capital was super cheap. You could take out a loan for less than 1%, and they were just getting more and more money. So the reviews on your success, business case success, it was not that harsh. Since the interest rates are growing, I see way more companies struggling with, hey, do we need to do another investment in that project? It's still not making money. What do we do? And in my opinion, and we've preached this for like 10 years since even before I started out with BW Ventures, I think as an innovation manager, you should prove the commercial feasibility of your project before you even start developing your product. So before you've written any line of code, before you created any type of technical prototype, prove that people want to pay for what you will create. And that's, I think, from a business perspective, one of your most critical things to focus on. And I know, it's not easy, but it can be done. So what we typically do, it's a process again. Like anything in innovation, I think the process is key. You should look at what you put into the system, put into the process, and learn from the outcome. So let me explain this a little bit more. In the first phase of a new project, I think it is crucial to focus on problem discovery. Learning about what is the main problem that you can focus for a specific customer group, what is the main frustration there, so not just the practical problem, but also the emotions involved in that. You want to learn about what kind of sub-problems or cause and effect relationships there are, because there's typically one big problem and then 3 to 5 sub-problems. But you can't predict that upfront. What you can manage on yourself is, hey, I want to do 3 to 5 experiments. And what I want to do as well is I want to talk to at least 10 people per experiment. You can manage that, right? You can just focus on that and say, okay, I'm going out of the building, I'm going out on the streets, I'm going to talk to 10 people. Or online, I'm going to look for 10 people that are within my niche and just, have a conversation with them about their problems and needs. Now, once you've learned about that and you actually, right, learned a lot about the problems, you could start figuring out what the existing alternatives are. Meaning, how are they trying to solve their issues right now? What kind of tools are they using? Why do these tools work? Why don't they work? What is their desired state? So what do they actually want to achieve with the technology or the products that they are using? And learning that will teach you a great deal about how to create a 10 times better, cheaper, faster, cooler, whatever it may be, solution to their problems. Now then you start to go into prototyping, and the prototyping is not technical prototyping, but what we'd like to do is we like to prototype like 2-3 different types of value propositions. So, hey, I know that you have a problem. I know that you're trying to solve it with the, technology X, Y, or Z. I'm going to promise you to solve it in a different way, and this is how what it's going to cost you, or how you're going to pay for the value that we're going to deliver. Now, once you start pitching that, you can get commitments. So people can actually sign a contract, a letter of intent, a pre-purchasing or whatever before you start developing that actual technology. And that has two main benefits. One, you know exactly what to develop. So you can run on leaner budgets because they actually signed for literally the value that you can deliver. The second thing is you have people that are actually waiting for your product because they signed a document or they prepaid for your product or service, which is going to help you in a later stage with your stakeholder management. And thus you can create a business case that is based on actuals instead of just crunching numbers in your Excel sheet. Now, I know I'm rushing almost through these five steps, but Julian will share a video in which I explain the process a little bit deeper, and the nitty details of how this process works. But my best advice would be is if you first focus on how to create a business case based on actuals and people that actually sign contracts and letters of intent that want to use your value proposition, then it's going to be way easier in a later stage to develop products, to get more financial resources if needed, and to align your stakeholders. So focus on the commercial parts first, and then later on see what technology you can use to better to deliver your value proposition, to deliver on the promise that you made towards these customers. Now, after you've created that business case, it's not over yet. So that business case, that process can be done within 3 months, but then the real thing starts, because that's the moment that you actually get financial resources and you need to plan the building of your first product and you need to scale your marketing and sales efforts. Now, I'm not going to dive too much into that, but I really think that is a second phase of the innovation process. And building your product and testing your marketing and sales messaging and approach is something that you can learn a lot, along the way. But I think the most crucial step first is, figure out how to create a proven business case. And then based on that, start stacking layers of validation in your product development and your marketing and sales approach. So what I think is maybe even the most crucial part of being an innovation manager is stakeholder management. I even joked on LinkedIn once that I think innovation managers should be renamed to the manager of internal negotiations, because I think like 30 to 40% of your time you're negotiating internally why you think the technology should be used, why you think this customer group is a super opportunity, or why you think this new earnings model can give you 30, 40, 50% more revenues or whatever. And mostly you're negotiating internally. But I think you can have a structure for that. And having that structure in place and applying it to all our customers helped us to get our results from literally 40% successful innovation projects up to 80%. So it's literally doubling our results by just applying a good stakeholder management process. Now, what is the stakeholder management process? I think there's one level, the most basic level, which is your project level. So you're working with colleagues, you've got a project, and in the project, you're talking to each other daily. At least have a 5 to 10 minutes daily stand-up and talk to what are the problems that you're trying to solve today, what are the experiments that you're running, and what do you want to get out of that. Second level is a cohort level, which are multiple projects that are being run at the same time and talk to each other on a weekly basis. What are the learnings from each other's? Then you've got a portfolio level, and a portfolio level, you should talk to each other bi-weekly. Update about, hey, you are like 3 or 5 stages ahead of us. What are your main concerns? How did you overcome the hurdles that we already have, that we're facing right now? And then from an organizational level. And the organizational level is, that's the highest level, but that's where you should involve your CFO, your CEO, your CTO, maybe even your legal department, and talk to M&A teams, for example. Do that on a monthly basis. And if you stick to these frequencies, not a lot is going to be a surprise. When you hit the jackpot, it's not going to be a surprise and people are not shocked. But if you figure out stuff that isn't working, it's not going to be a big surprise for the others as well. So keep them involved, keep talking to them. So if you started in this new job, in this new role as an innovation manager, I think you should focus on, start building a relationship with all these different levels and start to talk to them, from your perspective, from your, own assertiveness, on these frequencies, on these daily, weekly, bi-weekly and monthly frequencies, just to get them involved. And later on, you could start that same model and frequencies in the company itself. Now, the last question, because we're running a little bit out of time already, but when do you kill a project? Because I think part of being successful in your role is, on one hand, finding successful projects, finding successful ideas and creating them, but on the other hand, you also need to kill projects if they don't work. So invest hard, but also kill hard. And what we typically see is that after 3 months, that's the process that I just showed you. I think you can kill a project if you're not converting 30% of your pitches after 3 months. There's no product yet. There's no service yet. The only thing you have is a value proposition. And if you pitch that value proposition to 10, maybe 20 people, and not, less than 30% is converting on your pitches, then quit the project. Take out all the learnings and start a new project. Because otherwise you're probably gonna drag on this project for 2 years, maybe even 3 years, spending typically between 600 to maybe even 600K to maybe even 3 to 5 million. But in that stage, you already figured out that people don't want to pay for the value proposition that you're creating. When you have skipped that first process and you're building the first version of your product or your MVP, you want to test if you are really if you can really deliver on the promise that you made within that pitch. So you promise a specific value. For example, you can save 20% of your time by using this service or this product. But after building the first version of that product and you can't deliver on that promise and you don't know how to get to that promise, that's also one of the key moments to actually kill your project. Because what that means is you know what people want, but you, in all the effort, everything that you did, are not able to actually deliver on that value. If you continue here, then probably sales is going to sell way more of this typical product or service. But your product team is not going to deliver on that promise, and your churn is going to, it's going to go through the roof, because you're literally, you can't deliver what you promised to them. So this is also a very important part to kill your product if you can't deliver that. Then the third block, which I think is super important before you start scaling, massively, is if you are not able to get a return on investment of your marketing and sales expenditures, so what you spend on marketing plus sales, and get an ROI of more than 250% on that, then go back to the drawing board, because something is wrong within your funnel. Why do I mean 250%? Because it's a super high ratio, right? I mean, you put in €1 in the system and €2.5 come out. That's quite a high conversion rate there. But why is that important? If you sell, especially in a scaling mode, if you sell one product, you're able to at least get 2 new customers out of that one sale. That is the most important mechanic to help you scale your project. If for some reason you're stuck to 50% ROI, you're basically losing money on scaling your proposition, because you need to put in new marketing and sales budgets every single month or every single year. So if you're not able to get close to that 250% threshold, then have a discussion with each other. Maybe figure out a new way of marketing and selling the product or project, or just be brutally honest to yourself and kill the project, because you will not be able to scale it. I'm not talking about all the operational stuff here, but this for me is the most important metric to measure there. Now, in summary, what I think you as a new innovation manager should focus on, or what I advise you to do, is learn everything about the current innovation portfolio, not just the projects you will work on, but also learn more about all the other projects. Why did they fail? Why did it work out? And what was the reason to kill or to invest more in it? Get comfortable with venture building, startups and scale-ups, joint ventures, and the M&A process. And there's a ton of content out there on all of these topics. Number 3 is make sure you don't only work on technology, but also learn about business models and vice versa. So not just work on business models, but also learn the basics of new technologies. Write out your own process to innovate, and especially in the beginning, manage your input-driven goals. So how many people am I going to talk to? How many pitches do I want to do? Don't focus on the results. I want 3 out of 10 people signing my contracts. No, focus on the input-driven goals, because that's what you control. And all the outputs is what you can optimize, and you can learn from that. 5th one, get close with all the important stakeholders within your company, and not just the innovation lab or your team, but in every relevant department: finance, IT, operations, legal, and also higher management. Number 6, communicate regularly about your progress, learnings, failures, but also hesitations. And lastly, don't be too keen to accept big innovation budgets in the beginning. Stay lean and prove small success first, because the rest will come later. The bigger the budget you ask, the bigger the risk, and the more you're in the picture. Learn about these first steps. Prove that you can actually make money in early stages with new technology or new value propositions, and then start stacking. Make the compounding do its work then. That's my talk. It was, I think, 50 minutes instead of 45. But I'm also happy to learn more about your questions. So feel free, if you have any questions, to drop them now. We will make the recording available, so we will share them also to you later. Any questions?
Yeah, I have maybe a small question.
Yeah, go ahead, Ruben.
You're talking a lot about venture building, right? As a way to innovate within an organization or in a corporate. But it's like, is that like, and if you build a new proposition or business model, you within your agency choose venture building as the way to do it? I can imagine, is that the only way for you, or is that because it's quite aggressive for an organization to start a venture?
No, it's not. It's not the only way. I think one of the most used terms as venture building is popping up lately. I think if you just start a project internally and don't call it a venture immediately, that also works. It's I think the process is more important, right? Figure out what the value is that you can deliver. Then get to a business case, and based on the business case, you can decide whether you start an internal venture, whether you spin it out, whether you start investing in startups or scale-ups, or just even buy a company that already does what you figured out. So it's more of a form. It's one of the tools, right, that I discussed, than the go-to thing.
Yeah, no, exactly. Thank you.
Well, if there's no more questions, have a nice evening. See you probably in the next webinar. We're going to do more of these webinars, and you will see the recording in your email in the upcoming week. Have a nice evening. Thanks a lot.